Ever wondered what it takes to dive into the world of Forex trading? Today, unravel the steps to navigate this exciting and potentially profitable financial market. Forex trading, or foreign exchange trading, involves the buying and selling of currencies. With a daily turnover of over $5 trillion, it's the largest financial market in the world. But how can someone get started on this journey? First things first, it's essential to educate oneself about Forex trading. Start with understanding the basics. What is a currency pair? What is a pip? And what is leverage? These are the building blocks of Forex trading. Books, online tutorials, webinars. There are plenty of resources available to learn these concepts. Next, it's time to choose a Forex broker. A broker acts as a link between the trader and the market. When choosing a broker, consider factors such as reliability, transaction costs, customer service, and trading platforms offered. A good broker can make or break a trading experience, so choose wisely. After choosing a broker, the next step is to open a trading account. This process is usually straightforward and involves filling out an online form. Remember, different types of accounts come with varying levels of risk and potential returns. Choose an account type that aligns with your risk tolerance and financial goals. Next on the list is getting hands-on with a trading platform. Most brokers offer demo accounts where traders can practice trading with virtual money. This is a great way to get familiar with the platform and develop trading strategies without risking real money. Once comfortable with the platform, the next step is to analyze the market. This involves studying economic, political, and social factors that can impact currency prices. Traders use two main types of analysis: fundamental and technical. Fundamental analysis involves evaluating economic indicators and geopolitical events, while technical analysis involves studying chart patterns and trends. The final step is to start trading. This involves buying and selling currency pairs based on market analysis. Remember, Forex trading involves risk, and it's crucial to manage this risk effectively. One way to do this is by setting stop-loss orders, which automatically close trades when the market moves against you to a certain extent. To recap, getting started with Forex trading involves educating oneself about the market, choosing a broker, opening a trading account, getting familiar with a trading platform, analyzing the market, and finally starting to trade. Remember, Forex trading is not a get-rich-quick scheme. It requires patience, discipline, and continuous learning. But with the right approach, it can open up a world of opportunities. So, there you have it. A step-by-step guide to navigating the thrilling world of Forex trading. It's a journey filled with challenges and rewards. But with the right preparation, it's a journey well worth taking.